Good afternoon. And so let's talk about euro against US dollar. So in this pair is currently approaching a very important turning point where fundamentals and technicals are beginning to converge. The market is now focused on the upcoming European Central Bank meeting. The base scenario remains a rate hike from 2.15% to 2.40%, largely driven by renewed inflation pressure linked to higher energy prices and the ongoing Middle East conflict. Inflation in the Eurozone has once again moved above the ECB's target, while rising oil prices have forced policymakers to adopt a more cautious and hawkish tone. However, it is important to understand that much of this expected rate increase has already been priced into the market. The real question is no longer whether the ECB will hike rates, but rather what comes next. This is where the story becomes more interesting. Only a few weeks ago, markets were discussing the probability of three additional rate hikes. Today, those expectations have become far less certain. Investors are increasingly considering the possibility that the tightening cycle could be shorter than previously expected, especially if economic growth begins to slow while inflation pressures remain primarily energy driven. Another structural factor remains Eurozone competitiveness. Many European policymakers and business leaders have repeatedly expressed concerns that an excessively strong euro could hurt exporters competing against both the United States and China. As a result, a rapidly appreciating euro is not necessarily welcomed by all parts of the European economy. From a technical perspective, the most important development occurred during Friday's global risk-off move. As the S&P 500 fell more than 3% this day, investors sought safely in the US dollar, pushing euro US against US dollar below the critical 1.15, 1.15 and 6, 1.15 and 7 support zone. However, what happened next may be even more important. The market quickly found buyers near 1.15 and 7, 1.15 and 2. We can see from here active reaction. And producing a sharp reaction from support. And this suggests that the area remains a highly significant long-term demand zone and that buyers are still willing to defend it aggressively. That leaves euro against US dollar a critical decision point. If following the ECB meeting we see a strong V-shaped recovery, for example, till 1.16 and 5, 1.17, sustained trading back above 1.16 with breakout, renewed momentum toward 1.17, 1.18, then the market would likely be signaling that higher rates are providing fresh support for the euro and that buyers remain in control of the broader structure. On the other hand, if the rebound remains weak and every rally is met with renewed selling pressure, it will suggest that traders are becoming more focused on slowing European growth and the limited scope for additional ECB tightening. In that scenario, the risk of deeper correction would increase significantly. For now, the 1.15 and 7 area remains the key battleground. The support has already proven its importance, but the market's final verdict will likely depend on the ECB decision and, even more importantly, on Christine Lagarde's guidance regarding the future path of interest rates.